All right, guys, what's going on? Welcome back. Welcome back. It's gonna be a really quick video. Do me a favor, go ahead and give me a like right now because this video's fucking fire. You're gonna love it. If you don't, you'll remember to take it back at the end. So just give it to me now so you don't forget. I'll wait. Go ahead. Three, two, one. Okay. So this video is gonna be about knowing your opponent, figuring out who your opponent is. Okay. So what I mean by that is in trading, there's always someone to take the other side of your trade. Okay, that's the only way a trade happens. You have to have someone that's buying, and you have to have someone that is willing to sell to them. Okay, or the other way around. Otherwise, you don't have these two things, a trade can't happen. Okay, we get that part, right? So I talk a lot about limit bears and stop bears. Let me explain that part real quick. Okay, so a limit, let's just do it for longs right here. A limit bull is a bull, he sees a trend going up. Okay. And a limit bull, he believes that the probability is high that this is going to continue for whatever reason, an indicator, whatever you trade with, he just believes it's going to go higher. He believes it's going to go higher so much that he is willing to put a stop order above this price, this closing price right here. So if price trades above this, he's got the momentum on his side. He's playing for momentum, okay? So he'll buy this, and the market will continue because he figured that it would, because it looked very strong, and he's in profit now. He might add on here. If he's a good trader, he's adding on, right? So he's adding on, he's buying here, okay? And the market continues, okay? So what happens when this type of, this is called a stop bull, okay? What happens when this type of bull makes money? Well, if you know what a limit kind of order is, you'll get to see it. Okay, so let's start with this. So stop bull, he's making money buying the tops of bars. Now, how is this a problem? Let me ask you a question. You ever traded all day, and you look back at the end of the day? Say you traded all day, the chart looked like this all day. Okay, and you were long all day long. You only went long. You only bought. You never shorted, right? And at the end of the day, you're still a negative P&L. That ever happened to you? Okay, that probably was because you're violating this rule. So let me explain it to you, or this strategy here. So if this is a stop bull, okay, what do you think the opposite of this is? Well, not the opposite, but yeah, I guess it is the opposite. But he's not selling. I mean, the opposite buyer though. He still think it's going up, but he's not so convicted that he wants to buy the tops of these. Okay, he's not so convicted. So he wants a discount in the price. So he waits for the price to come back down to him. Okay, he sees the price going up, 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 and he's thinking, oh, as soon as it pulls back, I'm going to buy. So he gets a pullback. Okay, and this is where he buys. Okay, the limit bull buys right here. Okay, he buys right here, and then he's right, it does continue, and that's how he gets his profit. So every time the market pulls back, he buys, and then it continues back up, and he makes his money. That's how the limit bull makes his money. Okay, so let's take this concept right here and put these in the middle here. Let's expand this a little bit because I'm gonna show you how it breaks down. It's really simple. This is almost over. All right. So basically, what I want to get across to you today is that the opposite, okay, the opposite counterpart is the one that's most likely your opponent. It's the one that's you're most likely losing to. Okay? So for instance, if you have a stop bull making money, which means every time, if you look back and every time they've bought the high of the candles, if you would have bought the high of candles, it didn't retrace too far, it didn't pull back too far, it just kind of went. Some wicks are okay on the top, maybe a little bit, but it just goes boom, up, okay? You don't see any real pullbacks. If you look at a chart like this and you see stop bulls making money, it's very hard for a bear to make money in this type of market because the pullbacks are not really good. They can't even scalp, right? If you look at a limit bull trying to make money in this market, they don't make money either because they're waiting for pullbacks, okay, to buy at the bottom of bars, and the pullbacks never come. This never got down here. This candle never got down here, so they never got to buy. Okay, so this is one of those trend days where you look up and it's been trending up all day, okay, and you never were able to get long because it was a very strong trend and the pullbacks were small and you never got long. If you try to trade this day like this, you're not going to win because this is not going to be a good enough pullback for you. You're going to see this, it's going to pull back and it's going to keep going. You're going to see this, you're going to go, oh, finally I'm getting a pullback. Nope, it's going to keep going, okay? But if you traded this on a stop, if you traded this way, this was the winning strategy because every new bar that it put in, you bought the top of, and it continued to trend higher and higher, okay? So what I wanted to impress on you in this video is that when you are winning as a stop bull, who is most likely losing? Well, it's the limit bear, okay? That he's the one most likely losing because the limit bear is doing what? He's selling the tops of bars. So let's go to the limit bear right here. Limit bear, okay? As this a limit bear wants to sell, so he sees it going down, okay? He's not selling this because he's not a stop bear. This is what a stop bear would do. A stop bear would do just what this bull would do, but in reverse, right? So he'd sell the lows of bars thinking that it's probably going to be lower soon. And he'll get little pullbacks, but for the most part, it's not really going to threaten where his stop is, right? But this is a limit bear. A limit bear is selling the tops of bars, hoping that the trend is going to reverse soon. So a limit bear is doing this. He sees it going up, okay? A limit bear is selling all of these tops, thinking that at any time, okay, we're going to get a reversal. So he's selling the close of this, okay, hoping for this. But he doesn't get that. What does he get? He gets another push up, okay? He sells at the top of this, sees this pull down a little bit, sees this wick, and what happens? He sells on this wick, and then he's forced out as the bears come back to make more money. Okay, does that make sense? So if you are a stop bull, you are killing a limit bear, most likely. All right, so that tells you that one type of market participant is not making money. Okay, the limit bear cannot make money in a stop trend, and oddly enough, neither can the limit bull. Okay, because they rely on pullbacks. They rely on pullbacks to buy, and they never come because the trend's racing up. And they take these pullbacks as sell signals, and they get defeated again and again and again, okay, because the price is racing up. So you have the trend going up, the same trend going up, okay, and the bears are selling the tops of all these bars, okay, and they're most likely limit bears because limit bears want a price similar to the limit bull. Okay, they want price. They want to pay the price they want, and they feel if they get a better price, they can make the trade work out for them. But because the stop bears are so strong, the limit bears don't stand a chance. All right, and it's the same way when you are dealing with a limit bull who's making money in a limit bull trend. Well, if every time it pulls back, let's put it right here, every time the limit bull makes money, he's buying at the bottom of bars, okay? So he must be killing the stop. He must be killing the stop bear, okay? The stop bear. Because what is the stop bear trying to do? He's trying to take these pullbacks. He sees this pullback. He's trying to take this all the way down. So he's selling here. This guy's selling here, the stop bear. All right, so he's selling, trying to get continuation down, okay? But he's constantly getting pulled back and taken out up here. Okay, this pulls back, puts in a bar, puts in another smaller bar. He's selling this and selling this, okay, thinking that he's getting into a reversal, but he's just going to be following the trend back up. So the limit bull, if limit bulls are making money, okay, buying on pullbacks, they are killing the strong bear participants in the market. Okay? Because they are selling the closes of bear bars, like the stop bulls sell the closes of bull bars. They're selling the closes of bear bars, and they're not getting anything out of it because every time they do, the limit bull is there to stop them. Boom. Because he's buying the closes of those bars because he wants a pullback. So, if you haven't figured it out by now, the easiest way to quickly figure out who you're most likely trading against and who took your money in that trade is to look at the opposite side. Okay? If you market it in, and a market is just a stop order because when you execute a stop, it tells your broker that I want to get in at the next available price, so it turns into a market order. Okay, and a limit order just sits in the market. Okay, it just sits at a price and it waits for a price to either come up to it so it can sell and go down for a profit. Okay, or it waits for prices to fall to it on the buy side so they can buy, and then it waits for a profit. Okay, these are all limit orders, okay, on either side. But if you just look at this now, this little matrix here, if you want to know who's on the other side of your trade most of the time, it's just the opposite kind of trader from you. So if you're a stop bear and you see stop bears on the chart stop bull, and you see stop bulls on the chart are making money, who are they taking it from? They're most likely taking it from the limit bear, as I just illustrated above. And if you ever see a limit bull making money, he's most likely taking it from a stop bear or someone that's entering at the market. So I want you to think of all these as how they place their order. Stop and stop is market. Okay, and limit, they're just resting in the market. So the stop bull's winning, he's beating limit bears, so you shouldn't be selling on limits. If limit bulls are winning, they're beating the stop bears, so the stop bears should stop selling below bars because the limit bulls below there are just buying them up, taking them out. All right, promise to be short. We got in at 12 minutes. If you haven't liked, please give me a like if you enjoyed it. If you didn't enjoy it, take your like back. All right, I'll see you in the next one, guys. Peace.